please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, it's a Wednesday. It's good to see we have some green on the screen. The Nifty sitting with a gain of around 30 points, approximately 25 points to be precise. Asian markets as well, they're more or less flattish the last time I checked. The Sensex, that's up close to around 100 points. A less than convincing start, but Mangalam, at least we have some green on the screen just to play with.
Absolutely. We have some green on the screen, and the important part is that from the expiry perspective, next week is the expiry. 10,700 put has the maximum open interest, and at the same time, from the technical standpoint as well, 10,690 is the 20-day moving average. So some recovery from there. Interesting. Let's see whether this gets spot into or perhaps sold into. That is something we'll watch out for. But as of now, looks like we are in the green, which is not a problem. With that, let's start the show. All the top stories that we're tracking this morning. Cipla, that one's the top gainer on the Nifty today after the company gets a US FDA approval for Sustaiva generic. The drug, which is used to treat AIDS, has a potential market size of $100 million.
And UPL is the top loser on the Nifty today. Reports suggest that the company's exclusive talks to acquire the Bill Ackman-backed platform specialty products agricultural pesticides business. Stock's the top loser.
IIFL Holdings in focus raises about 750 crore rupees by diluting 5.1% stake in its wealth management business, valuing it at over 14,500 crore rupees. Nirmal Jain tells CNBC TV18 they will be listing IIFL Wealth in the next 8 to 12 months.
And aviation stocks, they are low as passenger traffic growth slows in May, comes in at around 11.9 million passengers. That's the lowest number we have seen since September 2017. Rising fuel prices lead to an increase in fares. Well, how do you play the Nifty from here? We're sitting with a gain of around 25 points odd. Prakash is with us in the studio. Prakash, help us out. Is this looking like the actual thing, or is it looking like something that's only going to deceive by the end of today? Would you look to buy into the Nifty now, or do you believe we're going to trend towards the 10,700 mark?
I said this morning, good morning to you, that 10,750 is a very important level. If it crosses there, then perhaps we could be seeing an up move around 30 points. So I would wait for it to happen. So far, it looks like the low is holding, but I would wait for a confirmation. Once it crosses 10,750, today's high, I think we'll go for a 30-point move. So far, looks good to me. Let's see how it goes.
All right, let's see how it goes. The mid-cap index stating a bit of recovery. Prakash, your individual stock ideas?
I have two stocks, both on the banking sector. I like Axis Bank. That certainly is looking good to me. And Axis Bank can see a climb to around 530 zones. Stop below 520 on Axis Bank should be fine. And I also like HDFC Bank, seeing some kind of a traction. Yesterday we saw some kind of a sideways correction move, and looks like the up move has resumed here. Technical targets on the upside on HDFC Bank is 2050, stop below 2030.
All right, Prakash, thanks a lot for that. We will keep coming back to you all through the course of this day. Let's shift focus then back to the primary market action. Railways consultancy firm RITES gets ready for its D Street debut by launching its IPO today. Price band of 180 to 185 rupees a piece. To discuss this and more, we have Rajiv Mehrotra, the chairman and MD of the company, who joins us now. Thanks a lot, Mr. Mehrotra, for joining in. I was going through your numbers. Your last year's revenue was close to around 1,350 odd crore rupees, with an order book of close to 4,800 crore rupees. So if you could tell us, what kind of order inflow did you witness in FY18? What kind of order inflows are you looking to target in terms of inflows in FY19?
See, the net addition brings the order book to about 4,800 crores, 4,818 crores. And if you see the turnover of last 3 years, we have been growing at 15.7% CAGR in top line, and 7.7% in terms of PAT. This order book definitely is going to push up the growth in future, because the average execution period we can take as 1 to 2.5 years of the order book in hand.
And what we're trying to get at, Mr. Mehrotra, is how much of these orders came last year, what was the inflow, and what is the expected inflow in FY19, sir?
See, this is unexecuted portion of the orders, and net addition of about 1,300 crores has taken place during this period. Some important export orders have come in, some important overseas projects like Mauritius Metro project has come to RITES for technical services there.
All right, Mr. Mehrotra, if we got that number right, the order inflow is around 1,300 crores in the last year. For this year, you expect to get even 1,300 crores again?
Look, this is net addition because some executed,
All right.
then some more added.
Absolutely.
Net addition, I'm saying. Yeah, net addition.
Absolutely. And Mr. Mehrotra, I just wanted to get this right. You're a consultancy company, right? You don't have any manufacturing unit.
Yeah. This is a multi-sectoral consultancy company.
Okay.
Predominantly consulting business, about 55%.
Okay.
We also do exports of rolling stock, locos and coaches.
Absolutely.
And we also do wet leasing of locomotives in India.
All
we
right.
also have a power arm which does the power procurement services.
All right. So, Mr. Mehrotra, you don't do any manufacturing. You're basically doing consultancy. So, I was looking at your margins, and 25 to 30% is what you're doing. You know, that's looking very, very juicy for the kind of business you are into. What kind of a margins? All everyone was looking out whether or not they should be applying for this IPO. So, if you could give a sense, what kind of a revenue growth you're looking at? You told us 15% in the last few years. Now, going ahead, can you maintain that 15%?
Yeah,
and margins, what kind of a number, sir, can you maintain? 25, 28%? What is it?
See, I would not comment on the future numbers, but I can only add again that last 3 years we have grown at 15%, and with our highest order book in hand, with timeline of 1 to 2.5 years, there is reason to believe that the growth can be accelerated.
Okay. Margins, sir? Margins? 26% it was.
Margins,
then it went to
EBITDA
30%.
margins.
Go ahead.
See, if you exclude other income, it would be 25 to 26%. If you include other income also, we see EBITDA margins at 31 to 32%.
Okay, 31 to 32%. All right, Mr. Mehrotra, in that case, there is always a risk of competition because in this business, a lot of people might come in eyeing the margins, the kind of margins that you make. But my question is, how much of your revenues from the government that you get is on a nomination basis, and how much of it is something that you bid for competitively? Because that's a risk, right? Going forward, if the government starts competitive bidding, then all your margins go away.
Look, RITES is into business for last 44 years. So we get business on nomination as well as on competition basis. So it is not that if nomination reduces, the business will shrink.
So how much of it is nomination, how much of it is competition, if you could break that up for us?
Broadly say 2/3, 1/3.
2/3 is nomination.
On nomination. But yeah, besides Ministry of Railways, we work for several ministries of the central government. Put together, the portfolio of projects is comfortable at any point of time.
Okay, all right. Sir, if you could help us out, what's the total number of employees and what's the revenue per employee, if you have those details handy?
We have about 3,200 employees.
Okay.
Of whom about 2,100 are regular. We also add on project-specific basis, so there are about 900 people in that category.
Okay.
And about 200 people on deputation from the Government of India.
Okay.
And if you say average output in terms of revenue, it's 41 lakhs per employee, because we book only consulting fee as our income.
Super.
Being a consulting company, only fee is booked as our income.
Okay. All right.
So this 41 lakhs is per employee fee income.
And how many employees do you add every year, sir?
Roughly 80 to 100, and more of it is on the replacement to retirements.
Okay. All right, Mr. Mehrotra. Thanks so much, sir, for joining in. All the best. Looking forward to speaking with you more often once you're listed on the exchanges. So that's management there. They're talking about a good growth on the top line. Around 15% is what they've done. Confident of maintaining that. And margins in the vicinity of the higher 20s is what they're talking about. Well, we'll slip into a short break. You come back, we'll get chatting with another smaller cap company, Kalam Textiles. Stay with us.
Welcome back. A couple of heavyweights trying to bat for the Nifty. We have Reliance, which is at the high point of the day. ICICI Bank too moving from the lows, as well as we have Z giving the entertainment as far as Nifty is concerned at the high point of the day. But the stock on our radar right now is Kalam Textiles, a small cap company, but they're here to discuss their FY19 business outlook and more. We have the joint MD and CEO, Mr. GVK Reddy, joining us in our studio. Thanks a lot for joining us, sir.
Thank you.
Last 4 or 5 years, you've been growing in excess of 10-12% on the top line. Last year was a weak one. What kind of revenue growth and what kind of margins can we expect in FY19?
I think we'll have at least 10% growth in both in terms of turnover and in terms of profit margin. And maybe profit margin we expect to be, this year we had around 21 crores before the taxes. And we expect to have around 28 to 30 crores.
20 to 30 crores
Yes.
is what you're looking at in terms of
Yes.
profit before tax.
Yes. Yes.
All right, so you're talking about good growth. You're talking about nearly a 35% growth in terms of profitability.
Yes. Yes. Yes.
35% growth in terms of profitability, and top line you're saying you'll grow by 10%.
Yes.
So how does that happen then? You're expecting margins to improve from here. Last year you did margins of in that vicinity of the higher teens, 15 to 18%. So what kind of a margin can you tell our audience out there that you can guide for?
We have improved our operations, and we have a vertical integration from cotton ginning to ring spinning,
Right.
rotor spinning, yarn dyeing, and to the weaving.
So, Mr. Reddy, what we're trying to get at is what kind of a margin can you guide us for? If you're going to be growing by 10% on the top line, your margins, a sustainable level could be around 16, 17%? Could it
Yes.
be 18%?
Yes.
What would it be?
Yes, around 16%.
Around 16%?
Yes.
Okay.
All right. Can you tell us a little about the debt on your books and the cost at which you borrow? Because you paid, what, 22 crores in terms of finance cost last year?
Yes. We are there for last 25 years, and all 25 years we are a profit-making company.
Okay.
And we have grown from 14 crores turnover to 320 crores turnover.
The debt on your books is how much?
Yes, we have around 200 crores as term loans,
Okay.
and around 120 crores as the
So
working
320
capital.
crores is your total
Yeah.
debt.
Yes.
You pay around 22 crores in terms of finance cost. Do you get
Yes.
any subsidy or something?
Yes, we have technological upgradation fund, 5% interest subsidy, and on certain term loans, and we also have state subsidy in the weaving process. Yes, we have technological upgradation fund, 5% interest subsidy, and on certain term loans, and we also have state subsidy in the weaving project.
You know, Mr. Reddy, we totally take that point that you were telling us the way you all have grown in terms of a top line, your profitability as well.
Yes.
Isn't this debt a bit of a worry for you? Your market cap is around 130 crores. You have a debt of around 200 crores, plus you add on the working capital around 300 crores. At some point of time, wouldn't you want to start reducing this debt, maybe increase the profitability of the company?
Certainly, certainly. But in any textile company, our investments are high, because we are the machinery is more depreciating, so we have to replace the machinery for the modernization purpose. But certainly we have reduced our debt already.
By how much?
Around 50 crores.
50 crores. Okay, that
Yeah.
was, I think, in the middle of FY 16 and now.
Yes.
You know, the
yes.
big concern for textile companies like yours as well, you keep on talking about capex, you will put in some more looms and stuff as well.
Yes.
But your asset turnover is sub 1 times. Why exactly? What explains that? Because the others we speak to do at least 1.2, 1.3, some even 2.
No, in our particular case, we are highly vertical integrated. If you see the individual turnover of spinning and individual turn of weaving, we are more than 500 crores.
Okay.
But whereas because we have the spinning yarn going to the weaving, so there is a offset. That's why our turnover is shown as 320 crores or 330 crores.
All right, sir. Thanks a lot for joining
Thank
in
you.
and giving us
Thank
all
you.
those details. We will get back to you once you report the numbers
Thank
that
you.
you've guided for
Thank
as
you.
well. With that, we'll slip into a short break. Come back. We'll talk about Borosil Glassworks. That stock is on our radar. We'll get chatting with Mr. Srivar Kheruka, the CEO of the company. Stay with us.
Okay, all right. Let's get chatting with the next management as we promised. We have Borosil Glass. That's the stock in focus on the back of the company announcing a scheme of arrangement. Remember, the stock has been buzzing all through June. In fact, it's up close to around 15-16% approximately. But to discuss what exactly is the scheme, we have Mr. Kheruka, the MD and CEO of the company, who joins us. Hi, Mr. Kheruka. Thanks so much, sir, for joining in. First things first, just wanted to understand this scheme that you're talking about. Post this merger, demerger, how many companies will be listed, if you could help us out? And if you could just explain to us the scheme, how does it shape up?
Okay, so for historical reasons, going back many, many years, Borosil companies had a complicated shareholding structure with cross-holding amongst the companies. And we decided that, we need to eliminate the cross-holdings as well as eliminate certain related party transactions. So this scheme now results in 2 listed entities. So shareholders can choose which one to buy or buy both, or add or reduce their positions in each of the businesses. And the 2 companies will be called Borosil Limited, which will have the consumer and scientific products business, and Borosil Renewables, which will have the solar glass business.
All right. So if I take a look at your FY18 consolidated revenues, sir, the scientific and consumer business contribute about 450 crores to the revenue, 250 crores coming in from the consumer business, and about 186 odd crore coming in from the scientific business. The other part is the flat glass business, which I believe is your Gujarat Borosil business. That has around 200 crores worth revenue coming in. So is it fair to say that the two listed entities that you're talking about, one of them will have revenues of 450 odd crores, the other one is 200 crores, with the relevant margins that these segments have been posting?
Yes, that's right. That is exactly right. Also one of the reasons to do this was that, both the businesses had aggressive growth plans. And we expect, for example, in Gujarat Borosil, which will become Borosil Renewables, we are adding capacity, doubling our solar furnace over there. As well as in consumer business, we have been focusing on the two categories. One is storage, to compete with plastics. There's a lot of buzz, anti-plastic buzz happening, and we are producing products which can allow consumers to switch. As well as tableware, we bought a company 2 years ago which makes opal glass. So with two separate entities, two separate managements, each one can, chart their own growth in the future.
Okay, let's talk about both the segments then. Segment 1 and Segment 2 that you were talking about. What kind of a growth number do you look at for Segment A that you were specifying? They had two segments out there. And the other part of the business, the renewables business. What kind of a growth number are you looking at? What could be sustainable margins, or at least give us a range?
So in terms of the consumer business, the CAGR, we expect 15 to 20%. And in the short term, I think we can be on the higher side of that range. On the scientific business, it's more stable, it's more steady. There, the growth will be somewhere in the 10 to 12% CAGR. And also, I think at the moment, we can be on the higher end of that range. The solar business is dependent on capacity, so it's a step function. So at the moment, we are at 100% capacity utilization. That's why we are adding a new furnace. When we add a new furnace, we can straight away double our turnover. And, you have to keep adding production in order to increase.
And when does that happen? When does that furnace come on stream?
The solar furnace, it's a long gestation project, so it'll take about 12 months from now to come on stream.
So after 12 months, we can expect this revenue to double, say, in the next financial year?
Yeah, I think, it'll already be partly into the financial year, but yeah, more or less the revenue should double after that.
And the blended margins for both these businesses that you're talking about, given I'm sure there would be some sort of synergistic benefits also now, once you simplify the structure?
Yeah, so the EBITDA margin already went up last year from about, I'm talking about the consumer and scientific business, went up from 11.5% to about 15% last year. I expect that to go closer to 20 and could even cross that over the next couple of years. And as far as the solar business is concerned, we have been doing EBITDA margins of about 18 to 20%, and I think with the new capacity coming in and some scale benefits, that should also tend up to the 24-25% range.
All right, Mr. Kheruka, I remember reading a couple of articles, and you had joined us as well on the channel. There were some non-core assets. I remember you had sold some part of that, around 65 crores odd. Is that done? Do you have more non-core assets to sell?
Yes, most of the non-core assets have been sold. There are just a small amounts still remaining. We are in the market to sell them, but the 60 to 65 crores was sold a few months ago.
What are these non-core assets?
This is mostly real estate, historical real estate holdings of the company, which the company does not use for business purposes anymore. So that's...
Give that a value?
What's pending is less than 10 crores, so it's not material.
So it's all done.
All right. Mr. Kheruka, now, finally, before we let you go, just two things that your shareholders would like to know. One, by when will this whole scheme of arrangement, merger, demerger, relisting and the name change, by when will this whole process end, say 6 months, 8 months from now? And the promoter stakeholding, currently it's at around 72% odd. What does it stand at post this scheme of arrangement?
Yes. So the scheme of amalgamation and arrangement is not entirely in our control. We would like it to happen as quickly as possible, but there are a few regulatory and nodal agencies involved. We expect it to take 10 to 12 months for the entire scheme to be through. Obviously, we will try and do it as quickly as possible. On the second question, from promoter holding of 72% in Borosil and 74% in Gujarat Borosil, both the companies will now have promoter holding of 70.5%. So promoter holding will reduce somewhat in both companies.
All right. Thanks so much, Mr. Keruka, for joining in and giving us all those details. Well, by the way, keep an eye out. You know, we were looking at Borosil. That's a stock that was more or less flattish, Borosil Glassworks. But take a look at Gujarat Borosil. That stock is up nearly around 6.5% as we speak. But the markets on the whole as well. Let's pull up the other stock, Gujarat Borosil. That's the one we're talking about. That as well is moving higher. It's up nearly around 6.5%. But it's not just both these stocks. You also keep an eye out on the markets on the whole. Reliance Industries, that's batting for the bulls. That's come in there. And single-handedly, that's taken the Nifty to the high point of the day. So pull up Reliance Industries. That's batting for the bulls at the high point of the day. But I think on that note, we'll wrap up on the show. You stay with us. Trading Hour comes up next.